So you've shared some really timely info with
Yeah,
us.
this is the Q1 2025 update for the Spokane retail market. Fresh off the press, dated April 2nd.
Right, gives us that snapshot of Q1, so let's dig into it.
Absolutely. This report covers, all the key stuff: leasing, rent, construction,
This
sales,
whole picture.
and the economy behind it all. Basically, our mission here is to boil this down for you, make sense of what's happening in Spokane retail right now.
Exactly. Pull out those key trends from Q1 2025, figure out what they might mean. So let's start big picture. Overall market health. How's Spokane looking compared to, say, the national scene?
Well, it's interesting. Early 2025, Spokane's performance is actually quite similar to the national average.
Okay.
But this Q1 report does flag something important. Spokane's availability rate, it climbed during 2024.
Climbed how much?
It actually went over 5%. First
Wow.
time we've seen that since, 2019? So that's definitely a trend to watch.
Okay, over 5% in 2024. So where are we now, according to this Q1 data?
Right now, Q1 2025, the availability rate is sitting at 4.7%.
4.7. How does that stack up historically for Spokane?
It's a bit higher than the 5-year average, which is 4.2%.
Okay.
And compared to the current national average, which is 4.8%, Spokane's just, slightly below that.
So it rose, but it's still kind of in line with the national picture as of Q1.
Pretty much, yeah. Operating in a similar zone.
Now, you mentioned availability ticked up. Is that because of a lot of new buildings coming online? What's construction doing?
Yeah, good question. And this Q1 report makes it pretty clear new construction isn't really the main reason for that slight rise in availability.
Oh, really?
Yeah, actually, if you look at the net change in retail inventory for Spokane last year, it was negative.
Negative, like we lost space.
Down by about 900 square feet. Yeah, that accounts for both new deliveries and any demolitions.
Wow. So not a flood of new supply then?
Not at all.
Yeah.
I mean, there was about 160,000 square feet under construction at the end of last year.
Okay.
But that's only like a 0.4% increase in the total existing space. So very minor impact on the overall inventory. That availability increase in 2024, it seems like other factors were more at play as we enter 2025.
Okay, that clarifies the physical space side. Let's shift to cost rent growth in Q1 2025. What are the trends there?
So this latest data, Q1 25, shows annual rent growth for Spokane at 2.4%.
2.4%. Is that across the board?
Well, no, and that's what's interesting. There's quite a bit of variation depending on the property type.
Like what?
Power centers saw the strongest growth, 4.1%. Pretty healthy.
Okay.
But strip centers, on the other hand, saw the weakest growth during this period.
Makes sense. Different types of centers, different demand levels probably, especially now in early 2025. How does that overall 2.4% for Spokane compare nationally?
Nationally, asking rents grew about 1.8% year over year, according to the latest figures.
Ah, so Spokane's actually doing a bit better then, at 2.4% in Q1 25.
Yeah, outpacing the national average right now.
Seems like a positive sign for the market at the start of the year.
It is. And, the report points out Spokane has generally seen stronger rent growth in the nation since 2020.
Right.
But if you zoom out, look at the whole last decade. The cumulative growth is actually pretty similar. Spokane's at 34.7%. National is 32.6%.
So this recent outperformance is more of a short-term thing, maybe?
Seems that way based on the Q1 data, yeah.
Looking forward through 2025, what's the crystal ball saying for Spokane rent growth? Any forecasts in the report?
Yeah, the forecast in this Q1 update suggests growth is likely going to moderate. Going to slow down a bit as the year goes on.
Slow down. Is that a sure thing or?
Well, the report calls the risk pretty balanced. On one hand, there isn't a huge wave of new supply expected.
Right, limits the downward pressure.
Exactly. And leasing activity has been fairly consistent lately.
Okay, balanced sounds reasonable. But are there potential, clouds on the horizon? Any downside risks mentioned for 2025 rents?
Oh, definitely. Always factors to watch.
Yeah.
One key risk the report highlights is a potential slowdown, maybe even a further slowdown, in retail sales in the Spokane area.
Okay, consumer spending.
Right. They reference Washington State Department of Revenue data showing taxable retail sales actually decreased in the area in 2023. That's the most recent full year we have as of this Q1 report.
And if people are buying less stuff as 2025 goes on?
Then retailers might push back on rent increases, right? Or even ask for breaks. If that slower spending trend continues this year, it could definitely put a damper on future rent growth.
Makes sense.
Now, Spokane has seen strong population growth, which helps.
Yeah, more people, more potential shoppers.
True. But the report also notes that average wages in Spokane are below the national average and job growth has been slowing down.
Ah.
So those things could continue to squeeze retail sales and, eventually retail rents this year.
So it's kind of a push-pull, isn't it? Population growth helping, but maybe some economic headwinds constraining spending as we move through 2025.
That's a good way to put it.
Let's zoom in then. Can we get some specific numbers for Q1 2025? Asking rents, vacancy rates, maybe broken down by property type.
Sure. Overall, for Spokane as of Q1 25, the market asking rent is $16.82 per square foot.
1682.
And the overall vacancy rate is 4.7%. But yeah, you really got to break it down by type to see the real story. Big differences.
Okay, let's hear the breakdown for Q1.
All right. Malls. Rent is much higher, $21.90 a square foot. Vacancy's 5.2%.
2190 for malls.
Power centers are asking $18.63. Their vacancy's a bit higher, 6.3%.
1863, vacancy 6.3. Got it.
Neighborhood centers.
Hmm.
Rent is $17.66. Vacancy is actually the highest of these at 7.3%.
7.3% for neighborhood centers.
Strip centers. Asking rent is $17.41. Vacancy 5.9%.
Okay.
And then, interestingly, general retail. Lowest asking rent at $16.37, but also the lowest vacancy rate, just 3.3% as of Q1.
It certainly seems that way, and the Q1 report backs that up with more detail on availability rates and net absorption for each type.
Net absorption being space filled versus space emptied, basically. Exactly. And when you look at what's being built right now, general retail has a big chunk under construction, 113,500 square feet.
113,000. Okay.
Yeah, compared to smaller amounts for neighborhood centers. And notably, nothing new reported under construction for malls or power centers in this Q1 update.
Okay, so activity is really focused there in general retail construction as we start 2025. Let's switch gears to leasing. Who's been taking up space recently?
Well, the Q1 report points to some buildings with significant positive net absorption over the last year.
Any examples?
Yeah, like Southgate Shopping Center up on South Hill and Evergreen Crossing out in the valley. Both saw a good amount of space filled up. These are established centers still drawing tenants in.
Any particular kinds of tenants driving this activity in early 2025? Auto parts? Grocers?
Looking at the biggest leases signed in the last 12 months gives us some clues. There was a big one, nearly 49,000 square feet at 609 S Fur Ave outside Metro North. Tenant wasn't named, though.
Okay.
O'Reilly Auto Parts took a large space, over 38,000 square feet, on North Division.
Right, auto parts.
We also see almost 35,000 SF leased out on Sprague in the Valley, and Burlington took space at Franklin Park Shopping Center, so it's really a mix.
A mix of tenants and locations, too, seems like. SC North, Metro, Valley, outside Metro North.
Yeah, activity seems pretty spread out across different submarkets as of Q1, not just concentrated in one spot.
Good sign. What about the future supply, the construction pipeline? What's actually being built right now?
Okay, pipeline. According to this Q1 2025 report, there are 4 retail properties under construction right now.
4 projects. Total size.
About 139,000 square feet combined.
Okay.
And here's the really interesting part. 100% of that space is reported as pre-leased.
100%. Wow.
Yeah. It represents about 0.4% of the total inventory, but that high pre-leasing rate, it shows really strong demand for these specific new spaces coming online.
Definitely suggests confidence in those projects as we look at early 2025. Can you tell us a bit more about what they are?
Sure. The biggest one is a Home Depot.
Ah, Home Depot. Where's that going?
4515 South Regal, up on South Hill. It's going to be pretty big, around 108,000 square feet.
Expected completion.
Looks like June of this year, 2025. Samuel & Co. Inc. is the developer owner listed.
Okay, Home Depot on South Hill. What else?
There's also a Sierra project mentioned, that's out in the valley, and a new branch for Central Idaho Credit Union. Both of those are also looking at a June 2025 completion.
So, big box, some smaller retail, a credit union. Gives a sense of the mix.
Exactly.
And geographically, where is most of this new construction happening?
It's mainly concentrated in 2 areas, South Hill and the valley.
Which lines up with where you said some of the positive absorption was happening earlier.
Yeah, it seems to be a connection there between current demand and where new development is focused as of Q1.
Okay, targeted development. Got it. Let's pivot now to sales. Investment activity. What's been happening with buying and selling retail properties in Spokane?
So sales volume over the last 12 months hit $108 million.
$108 million. How does that compare historically?
Well, it's lower than the 5-year average, which was $151 million, and definitely lower than the peak year, which saw $294 million in sales. So Volume's been a bit cooler leading into Q1 2025.
Who's doing the buying and selling in these deals? Big companies? Local folks?
According to the Q1 report, it's almost entirely private investors and owner users driving the volume this past year.
So not much big institutional capital flowing in right now.
Doesn't look like a no. More local or smaller private players.
And what kind of properties are changing hands mostly? Big shopping centers, small shops.
The bulk of the deals, interestingly, are for smaller assets, usually under 5,000 square feet and selling for under $1 million bucks,
Smaller deals then.
mostly. But the report does highlight one significant recent trade, a larger property, anchored by Burlington and Rite Aid, but 175,000 square feet total.
Okay, what happened there?
It was bought for redevelopment, sold for $10.2 million, including the land.
Redevelopment. So that space might not be retail in the future.
Exactly. That kind of sale can actually take retail space off the market long term.
Which could actually help keep the market tighter, maybe.
That's what the report suggests, yeah. Spokane's pricing has been relatively stable, maybe because it's a smaller market with more local focus. Combine that with some space potentially being removed through redevelopment, it could keep things fairly tight for investors.
Interesting dynamic. What about key sales stats from the past year? Cap rates, price per square foot, anything stand out as we look at Q1 2025?
Yeah, the average cap rate over the last 12 months was 6.9%.
6.9. Okay.
Average price per square foot came in at $198. And the average vacancy of properties when they sold was 9.8%.
Almost 10% vacancy at sale on average.
Yeah. The report also lists some specific big sales, like 165 South Post Street sold for $5.2 million,
Right.
and a Dollar General out on Highway 291 sold at a 6.3% cap rate.
Give some concrete examples, and do these sales trends look different if you slice them by property type, malls versus strip centers, etc.?
Oh yeah, definitely. Looking year to date as of Q1 25, general retail has seen the most sales activity by far,
Okay, lots of general retail trading.
followed by neighborhood centers, then strip centers, malls and power centers. Much lower sales volume recently.
And price per square foot? Does that vary too?
It does. Malls technically show the highest average price per square foot, but that's based on very few sales. After that, it's neighborhood centers, then strip centers, then general retail. So yeah, the sales market in early 2025 looks quite different depending on the property type you're focused on.
All right, super helpful on the property specifics. Let's pull back again and look at the wider economic context in Spokane. What's the foundation this retail market is built on?
Well, Spokane's a major job center for Eastern Washington, right?
Yep.
And really an economic hub for the whole inland Northwest.
Logistics is big there too, isn't it?
Huge. Its location is great for transportation. That's helped attract companies like Amazon, which has grown its presence there. Plus, the Spokane International Airport expansion is a big deal too, boosting that connectivity.
How's the overall economy performing? GDP growth.
In 2023, the region's GDP grew 3.1%. That was actually slightly better than the U.S. average.
Okay, solid growth. How's it compared to similar cities like Boise?
Kind of middle of the pack compared to some other Pacific Northwest cities like Boise. Yeah. We'll likely get updated figures reflecting more of 2024 in later reports.
Spokane used to be heavily reliant on natural resources, right? Mining, timber. Has that changed?
It has, significantly. While things like aluminum production are still around, the economy is much more diversified now.
What are the big sectors today?
Education and health services is huge. Government is another major employer, and wholesale and retail trade itself. Think Fairchild Air Force Base, Providence Health, the state, Spokane Public Schools, and Amazon, of course.
That diversification probably helps cushion things a bit, doesn't it?
Definitely provides a more stable base for the retail sector.
How did Spokane's economy handle the pandemic roller coaster leading up to Q1 2025?
You know, the report notes Spokane didn't see quite as sharp a drop during the 2020 shutdowns as some other places, and it bounced back relatively quickly in 2021.
But more recently?
More recently, there have been signs of growth maybe softening a little. Job growth has been strongest in areas like healthcare, hospitality, professional services.
Okay.
But labor shortages are still a thing, especially in hospitality, even now in early 2025.
The Q1 report also mentioned housing affordability. That's a national conversation, but what's the deal in Spokane?
Yeah, it's a really big issue there. Get this. Since early 2020, apartment rents in Spokane are up about 20%.
20%.
Yeah, which is actually more than the rent hikes seen in Seattle or Portland over the same time.
Wow. And house prices?
Also up significantly. But here's the kicker. Median household incomes in Spokane are still below the national average.
Ouch. Rising costs, lagging incomes.
Exactly. And that combination is probably why we're seeing in-migration slow down and the population growth rate has been trending lower since 2019, that's still relevant context for Q1 2025.
I heard the city changed some zoning rules to try and help with housing, increased density.
They did, yeah. Adopted new regulations.
Has it made a difference yet, according to this Q1 report?
Well, the report says in the year after the rezoning, there was only like a 1% increase in housing units permitted. Very modest.
Only 1%. Why so little impact initially?
Could be a few things. Rising construction costs are still a factor. There's also a wave of new apartments finished recently, adding supply. And, like we said, that slowing population growth might be making developers a bit cautious right now.
Makes sense. So, summing up the economy for 2025, what are the key things people should watch?
Keep an eye on job numbers. Obviously, overall growth and which sectors are adding jobs, the unemployment rate, net employment changes, median household income trends, and definitely that population growth figure.
And this Q1 report has tables showing all that.
Yeah, detailed tables comparing Spokane to national benchmarks. Useful for seeing where things stand. For instance, unemployment's been low, but that slowing job growth pace is definitely something to monitor this year.
And the main demographic trends shaping Spokane as of Q1 2025.
Population is still growing, but slower than before. Same for household formation and labor force growth. Income's been going up, but you have to weigh that against those big housing cost increases we talked about.
Right, it's all connected.
Exactly.
Okay, let's get geographical again within Spokane. You mentioned submarkets earlier. Can we break down performance a bit by area as of Q1 2025?
Sure. Spokane's got several distinct submarkets. The report shows the biggest ones, in terms of total retail square footage, are the Valley and the SE North Metro area.
Valley and SE North Metro, got it. Do rents vary much between these areas?
Oh yeah, quite a bit. As of Q1, South Hill generally has the highest asking rents.
South Hill on top, lowest.
Looks like the outside Metro South submarket tends to be lowest. And rent growth also varies over the past year. Places like West Plains and NE North Metro showed stronger growth than others. You really have to look locally.
Definitely. What about vacancy and absorption by submarket? Any hot spots or cold spots in Q1?
Vacancy varies too. Downtown Spokane, the CBD, has a really low vacancy rate right now.
Okay, downtown's tight.
Whereas South Hill actually has one of the higher vacancy rates among the core areas in this report.
Interesting. And absorption, space getting filled.
It's mixed.
Mm-hmm.
Over the last 12 months, some areas like the Valley actually saw significant negative absorption, more space emptied than filled.
Oof, negative absorption in the Valley.
Yeah, others are more stable or positive. And that construction ratio space being built versus existing space that's highest in the Valley and South Hill, matching where those new projects are.
Okay, this submarket detail really drives home that Spokane isn't just one single market, is it? Lots of micro trends within the city as of Q1.
Absolutely.
Now, this report, as you mentioned, has some really granular tables: supply, demand, rent, vacancy, sales broken down by property type, going back years and even forecasting out. Can we pull out some key takeaways from that detailed data, thinking about Q1 25 and the near future?
Yeah, those tables are dense but useful. Looking at supply and demand, you see the history for overall retail and then malls, power centers, neighborhoods, strip, general retail separately.
Net absorption, inventory levels.
Right, and the forecasts. For overall retail, the projection is for modest positive absorption going forward from Q1. Importantly, that construction ratio, it's forecast to stay pretty low across most property types in the near term.
So, not expecting a big wave of new supply based on these forecasts.
It will look like it now.
And the rent and vacancy tables, broken down by type, what do they show leading up to Q1 and beyond?
Those tables track asking rent in dollars as an index, percentage growth, compared to the peak in vacancy rates in square feet percent and change. Again, for each property type.
So you can really trace the history.
Exactly. See how things fluctuated over the last decade, what the projections look like? For instance, overall vacancy is forecast to stay fairly stable from Q1 levels short term.
And rent growth.
Expected to moderate, like we discussed from that 2.4% reported for Q1. It's also interesting to see how different property types like malls versus general retail recovered from past downturns differently.
Provides that longer-term context. Finally, those detailed sale trend tables by property type. What are the big takeaways on volume, pricing, cap rates across categories from that data as of Q1?
Yeah, those show completed deals, volume, average price per square foot, plus overall market pricing trends like average price, a price index, average cap rate.
And investment picture.
Right, from 2014 through forecast to 2029. You can track how volume and pricing have ebbed and flowed, see how cap rates behaved. They've been relatively consistent, actually.
Even with volume fluctuating.
Yeah. And again, you see clear differences between property types. Mall sales trends look very different from general retail sales trends over that period. These tables really give you that comprehensive view of the investment side as of Q1 2025.
Okay, this has been incredibly thorough. A real deep dive into the Spokane retail market using this Q1 2025 report. So, summarizing, it feels like Spokane is, generally moving with the national market, but with its own distinct flavor.
I think that's fair. You got that recent uptick in availability despite not much new construction, which is interesting.
Right, and the rent growth varying quite a bit by property type, plus that ongoing interplay between population growth pushing demand and maybe some economic factors like wages holding things back a bit.
Exactly. It's a nuanced picture.
Hmm.
And thinking about all that, especially this latest Q1 25 snapshot, the slowing rent growth forecast, the potential for redevelopment taking space offline, Spokane's unique economic spot. What do you think is going to be the biggest single factor shaping Spokane retail over the next year or so?
That is the million-dollar question, isn't it? Something for all of us to chew on as we look past Q1. Now, if folks listening want to get even deeper into this data or have specific questions,
Yeah, the contact listed in the report is Eric Peterson.
right, Eric Peterson at 509.903.9077. He'd be the one to talk to for more specific.
Definitely. And we'll be back with more deep dives into other markets soon.
Look forward to it. Thanks for breaking down Spokane Q1 2025 for us.
My pleasure.